All right. TGI TF Thursday, Friday. Doc here from North America. Tomorrow is a national holiday here, or at least we celebrate it there. And then July 4th is Saturday. So U.S. markets are probably going to chill. This is going into the beginning of I guess you could say, the end of the last quarter and the beginning of the third quarter, and dollar cost averaging and all that stuff that goes on with money managers. And as we speak, and good morning, good afternoon, good evening from southern New Jersey on the east coast of the U.S. of A. We try to give you some insight and ideas of what's going on in the marketplace. So you can see there's the euro. We're going to be ending the day today in the United States. We're not going to be paying attention to the rest of the world. I'll do my webinar tomorrow because that's who I am. I'm always involved. And so, and nothing's, we don't even have a parade this year. No parades. So it even makes it worse. So here we go. You can see there's the euro. It's holding up pretty firm in here. It's lifting up. You can see on the J4X, you see the white line moving fast through the other two lines, showing no weakness. Hey, Robin. And you can see, oh, you know what I was thinking? Sending over the corn chart to you, too. And between today and tomorrow, you could throw the corn and soybean fresh charts up there. And just include that into the whole process. I think because the corn chart was even a little ahead of the bean chart. So definitely well worth looking at. All right. Anyway, there it is there, the euro. And you can see it's firming up. You can see this is a daily chart. You can see it's been kind of sideways in here. Right in there, right there, I guess you could say. It looks big when you go like that. But when you go and look at it in the broader couple-month trend, it's been kind of nowhere. You can see here we moved up into the daily buy there yesterday. The shorts were being covered here on the green and red dot the day before that, and the strength came in, and we're in a weekly buy anyway, so if anybody's short it's only because they're playing a short-term play. It's not anything long-term that we really take too serious. But, sometimes downtrends are fun. I mean, like you can see this one here worked out for somebody that wants to play that game. But when we're in a weekly buy and a daily sell, the idea is to just cover the longs. And that is it, because we're a very static situation here. We're only looking at charts in a 1 hour period, and then you don't see them again for 23 hours. The best you can do is go and tune into like a J4X and put the same combination together I do here, and it gives you a flavor of our mathematics, about 55-60% of it, which is really cool compared to nothing at all. So you can see that the bounce like it occurred here, and the bounce that occurred here, basically the 25th. I guess there's the 25th. Is that the 25th? That's the 18th. And there is the 25th there, and there's the 18th there. So you can see these bounces do correlate to our math. It's just that you don't have the zero line and you don't have our algorithm side of it. But it's better than nothing as far as I'm concerned. So anyway, there we are with that. Looks like the way we're going, as far as I'm concerned, it's going to be closing in a weekly buy, because you can see here it's still above and they're showing strength there. And tomorrow I'm not going to be too serious about that number because not enough participation. And that's really what it comes down to is the lack of participation makes it not worth paying attention to the numbers of tomorrow, because it'll be very, very thin. Unless there's a dramatic move on dramatic news, today, in all intents and purposes, is the Friday of this week. All right, now let's jump over to the cable, see what the cable looks like there. Cable's been acting even stronger, which is cool. And let's see if we can find it here. Cable, where are you, cable? Well, that's there. You can see it's moving up also. Oh, no, wait a minute. I didn't get that. There it is. Cable. Right there. And we'll switch it over there. And you can see here it's making a much stronger move than the euro. You can see the white line is really rocketing up here. And you can see same situation. Oh, we need to put a daily buy number in there, don't we? So right there. There we are. So there's the daily buy there, and it shows more life in it. This has come off of being weak, and the buyers are coming back in. I'd imagine that's an all clear sign when we see the weakness in the dollar. It means that the world is feeling a little bit more comfortable economically, because the dollar is so overvalued when it comes to its consistent strength that you would have to assume that if they are willing to sell a few dollars and try to bring it down a little bit is something positive. Usually money going to the dollar is usually a flight to safety. Same thing with the bonds. You know, buying U.S. bonds and interest rates dropping is a flight to safety. It's not a like, oh, great, the economy's doing fantastic. It's the opposite of that. So I guess you could say in many ways, if you look at it in a very theoretical, esoteric way, the strong dollar overall says that the world itself is not in really good economic shape. That's probably what it's saying, and so it's running to the U.S. because we are an island of profits and so forth. ZZZZ, hey, how are you today? Hi to you too. Another fun-filled day, so we just keep on rocking. Let's see. So I guess that's the only way to really describe it. And at the same time, the central banks and the Federal Reserve are really fighting to keep stability. So a combined effort of keeping stability and at the same time looking for a return on your investment pushes everybody towards the dollar and the U.S. economy. And then obviously there's going to be little teeny pockets here and there of places to go also in other countries. But overall, it's pretty much here. It's unfortunate. It would be nice. It's not like the old days of the 1960s and 70s and even the 80s, you know, where you had foreign corporations that were doing really well and competing with against American corporations. By the 90s, it seemed to be like after we got the Cold War all done with, it just seemed like we just leaped ahead of everybody. You would have thought that once the Cold War was over with, the free nations that were partially capitalist would have like leaped forward, but instead, with the Cold War ending, it seemed like they turned it up on becoming more socialist. And so corporations have diminished even more and become less competitive outside the United States, which is really disappointing. Again, one of the reasons why the euro was created, hoping that there would be a United States of Europe, you know, thinking that this could be anchored by, like, you know, the fourth largest economy in the world, which is Germany, and France at one time was a very strong industrial nation, and Italy, and Spain, and Britain being a part of all that. You know, it almost screamed like they could be very competitive with the United States, but instead their government policies moved even more closer to socialism and communism after the Cold War than during the Cold War. So that is unfortunate, and that's why we get stuck with a strong dollar. And it's not something we relish. We would like to see somebody pick up the mantle and be able to lead the world, but right now it doesn't seem like anybody's there. And the false hope of China is dropping away day by day. They've destroyed their brand name. They've got a currency that doesn't trade. You know, they're not very innovative. Instead, they seem to be just manufacturing, and so that's not any real help there. Okay, and that's pretty much the irony of a strong dollar. Now let's take a look at the Turkish Lira. It is baffling me. We go to the dun dun dun, the fact check sheet. After the other two we just looked at, euro and cable. 5 weeks in a buy, 6 days and 6 weeks in a buy, and they're both in daily buys there. But the Turkish Lira, 30 weeks in a buy. I mean, they just and they've frozen that thing. That thing is frozen. I saw where uh, the French are fed up with Turkey and talking about leaving the NATO games or whatever they're doing with NATO at the moment, ship-wise, because they took a shot at him or almost shot at the Turkish, the not the Turkish ship, the the French. There it is, right there. Let's see if we can show you the headline. Right there. We can get that headline up there. Let's see. I know I can. Where's it at? There it is, right there. France suspends role in NATO naval mission, outraged over Turkish aggression. I mean, what is doing that to the Turkish lira? I mean, it's like as if they've turned it off, which is really good for the population. I mean, if it doesn't go up anymore and doesn't go down, it's stable. That's a positive thing. But that is really strange to see it locked in such a tight range. Titus, how you been? Today is our Thursday, Friday here in the States. Yeah, so we're at the end of the week here. Now, Doc will be here tomorrow, and we'll go through what's going on in the world. I'm sure something's going to be going on in the world, but the liquidity will be really thin. But yeah, look at that Turkish lira. I mean, that is enormously strange. It's like as if it's had a major timeout. It's doing nothing. Huh. Funny, isn't it? Odd situation to see. And we just keep on hanging in there. And at this rate, it may come to the weekly sell. It's in the 72s, I think. Not 72s, I'm sorry, 82s, 83s. So it's just a matter of time. This thing might drop off again. All right, let's head over Canadian. There it is, line 20 on the dun-dun-dun, the fact check sheet. And you can see 6 weeks in a sell, 2 days in a sell. Okay, there we go. So it's joining in with itself now. So a short position for 2 full days now. Cool. Let's see what it looks like. Yeah, it's down, but it's not exactly too exciting. You can see that there. And let's see how the J4X looks like. I bet that white line is dashed all the way up. Right there. Little weakness it's showing there. Just a tick or two down. Yeah, look at that. They did dash up that first day. Second day, it started to roll over. But look at the slide. Wow. And it's not going anywhere. The product is not going anywhere. And you can see how it matches with us. Same situation, sliding down. So you can see the raw data. Or I guess you could say like the housing. In a sense, like when you're, the framework. You can see that the stochastic is rolling over, just like it's rolling over with our plot 1 indicator on the gas line. It's just rolling right over. So actually, that's white line is plot 4. The black is plot 1. So you can see that the pressure is on there. No real news, and it's summertime, so we're probably going to be using that excuse a lot. I see central bank intervention on Turkish lira. Is that what that is? It's too hot there? You mean weather-wise? And so the central bank, their central bank is, how are they keeping it so tight? I didn't think they had the resources to do that. Are they getting anything out of Libya? Are they making money out of Libya? Is that what it is? Did they end up with a lot of the Libyan gold or something? Is it possible? I mean, they're really involved in Libya. They got mercenaries there. I mean, it's like they're mining it. Yeah, I mean, it's like they're mining Libya. I mean, what are they getting out of? Are they moving some of the oil, or? It is. It's the strangest thing. And at the same time, they're involved in Libya enormously, and obviously they were threatening France there, another NATO partner. I guess that's really a drag. You're lined up with your ships. And all of a sudden, the ship next to you aims its guns at you. And you're like, whoa, what are you doing? Don't do that. You're supposed to be aiming them that way. And so I guess they must be benefiting from Libya financially. And we're just not hearing it. I mean, that's what the charts are saying. Something's going on. Libya has stabilized. The involvement of at first we thought it was a destabilizing force. But now you got to wonder. Let's see. Oil, yes, they could get oil from Syria, so they go to. They cannot. They could no get. Oil. Yeah, right. Okay, so they go to Libya. Matter of fact, they have like 10,000 Syrian mercenaries there, supposedly. That's a lot to finance, you know? I mean, I'm not sure how they finance them exactly, but, I mean, raping and pillaging? Is it like the old Viking days? I don't know. It's, you know, you get to keep a slice of what you steal. Beats the daylights out of me. They have, what, slave markets now in Libya. So I guess things are really bad in Libya. And since the media here in the United States has no interest at all but to rag on our president and nothing more than that, and all the criminality that goes on around us seems to be washed away by hiding from it. I saw where Joe Biden, the fellow who was running against Trump for the presidency, was indicted in like Ukraine or I guess it's Ukraine, and no word at all here in the States about it. None, zero, no idea. If it was the other way around, it would be on the front page of every newspaper in this country, over and over, day in and day out. So they must be benefiting financially from Libya. So that's the only thing I can figure. And they must have a very strong position there at this point. And now they threaten France. So that says something. But that is amazing when you look at that. Let's just look at it one more time. That is amazing. Right there. Look at that. Just bang, 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 bang. I mean, it's like as if it's been turned off. Look at that. Zzz, locked on the 85 area. Just locked 85 and a half, no less. Yes, indeed. Back to Canada. There's Canada. So, I'd imagine we're going to see a couple more weeks like this in this sideways action. Let's see. Titus says Biden is lucky. Doctors told him not to have public meetings. The doctors or his campaign managers? If I was his campaign manager, I'd tell him not to have public meetings also. The guy is a disaster. Did you hear what Trump said? He said something like, I'll give him a half hour for every, I'll give him a half hour start on every question. Hey, are you getting over Canadian Day? Is that what it is, 54? We haven't seen you around. I figured you went out and partied it out for the last couple of days for Canada Day. Canada Day. How is it possible that unemployment claims are higher yet NFP is screaming added 5 million jobs, yet 40 million people have filed for unemployment? I told you what Obama did in 2010 to the unemployment statistics have not been changed. I've been saying this in this webinar for, 8 years? 10 years? Am I doing this 10 years? I know I've been doing it since 2012, that's for sure. In 2011. That's what it was. Obama changed the labor statistics going into 2010 into 11, and they made them official in 2011. And I talked about it at the time in the webinars. And what he did, I kept on saying to you when Trump came in, I said there's a good chance that the U.S. labor numbers will go minus. What they've done is they've put like a stochastic to it. So it's going to start banging against zero. It's going to look like May oil one day. It'll be like the way the May West Texas futures contract went minus. Unemployment will go minus one day. And I don't see Trump changing it. He's leaving it alone. I don't blame him. Democrats made that mess. Let them live with it. It's only a stat anyway. Who cares? We don't even follow fundamentals. So that's where we are on that. All right, now, so you didn't answer the question. Did you go partying it out for like the last couple of days? Is it like one long party up there in Canada a couple of days before July 1st and a day after July 1st, and you're just hungover, and now you're going to be going into the U.S. one? It's like you guys have your July 4th on the 1st, and then we have ours Canada Day and then American Day 3 days later. Party, party. Matter of fact, what is it? Thanksgiving is Columbus Day, right? In Canada. And it's Columbus Day here. So it's funny how some of those holidays, just wearing a mask. I've gone bandana. I'm kind of like John Wayne. I wear a bandana now. I'm going to start carrying a rifle around with me. Okay. And wear a cowboy hat. That's what I'm going to do. That's why I do that every so often anyway. But wear a bandana, carry a rifle, and wear a cowboy hat. We're in cattle country in southern New Jersey. That's what we are. At one time, my town had more cattle than people. That's not hard to believe around here. But anyway, so there we go with the Canada. All right, now let's go over to Swiss franc and see what's going on with Swiss franc. If anybody wants to see anything, shout it out. I'm just going through the list. Okay, you can see there the Swiss is doing the same thing, which means that it's becoming even more and more valuable as it goes down against the dollar. So you get less Swiss with the dollar every day. We have a physicist on from Tata Institute, I believe. Or is that the host? I think the host is from Tata in Mumbai. Okay, let's see. Let's go to the Swiss right there. You can see weekly sell, daily sell. It's going down. 2 days in the sell there. 5 weeks in the sell there. That's why we have the fact check sheet. Fact. All right, now let's see. What else can we say about the Swiss? Just valuable, 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 and valuable. Let's look at it on J4X. I'm going to go a little bit deeper in it. See what the lows look like. Did they go to 90 and 89 over the last year or so? Yeah, look at that one. It went down to 91 and change. Back in, when is that? February. I guess when the Corona thing really kicked out, money ran to that March 8th. Boy, is that a flight to safety or what? There's a perfect example of a flight to safety. Even against the dollar, Then it did the V bottom, and now it's been slowly sliding. So that was a flight to safety, and maybe they're. I don't know if they're going to break that. Look at that that channel range there they're playing with for like the last month, right here. I don't know if they're. I guess you would think that they'll try to go after the 93s or something like that. And we're staying in weekly sell and daily sells. It's probably going to go there. The odds will be very high. All right, now let's go over to yen. Where's yen? Right there. 2 weeks in a sell, 7 days in a buy. So it's been in a neutral for almost 2 weeks. Where are you? Right there. It's popping up again with the daily. And I'd imagine it's, oh, maybe not. It's not as high as yesterday. Now, if it was as high as yesterday, you would think that they would be putting pressure onto the weekly. I guess they are. The weekly is almost, it is at zero. See that plot 1 on that box there? Can you see that? Oh, you can't see that. So right there, see plot 1 is, now it's minus 0.1. A few seconds ago, it was just 0.00. So the weekly, there it is now, 0.00 again, as I chew on a little beef jerky. Right there. So we're just flirting with the weekly buy number, just right on the edge of it. And it's been in the daily buy from here. Kind of, I don't know what the best way to describe it. We went to the weekly buy here, had a nice move. Took a lot of work to get it. What is the daily sell up in here? But it didn't catch the weekly sell until here. And it was very short-lived, you know. And for 2 weeks now, it's been pretty much climbing over it, especially when it went into the green dots and went into the daily buy here. It's been climbing up and away from where we went to the sell here and here. So it looks like yen is just holding steady and firm. And I guess when we look at it on J4X, you can see how tight the range is, minus the Corona thing. Boy, look at that right there. Has that same thing like the Turkish Lira. Just super tight. Interesting action. These world markets are more fascinating and more fascinating every week. See what the ruble's doing. We haven't looked at the ruble. A little pressure there, I see. Over on, is that line, what is that, line 18. 12 weeks in a sell, 5 days in a buy. So obviously, it's been going down. Playing around here. Right there, you can see it's putting some pressure on it. See, these lines are turning over. Let's see what the Rubalaya looks like. Ruble Ruski. Right on the edge. Where's the box there? It's at 0. Look at that. 0. And see, plot 4 is 0. They're both at 0 now. And this thing's trying to get into the buy at the same time. It's at -2. It was -3 there a few seconds ago. And let's see what plot 4 is. -5. -0.5. Really tight. All right. All summertime blues. Oh, there we go. The weekly buy and daily buy for GBP on the check sheet. So a momentum algo like stochastic uses the high, low, close, open, correct. What other parameters are available to sense the bullish trends specifically? That's a good question. Let's see. Well, our math does the reading, and tells us the bullish and bearish trends. I don't really follow volume for direction. I follow volume for confirmation that there's action, healthy action in a product. So in other words, if you're following a product that has really low volume, it's going to be harder to get accurate direction out of it. You need some solid action. Now, some products that are really low volume can be really good at the beginning of the day and at the end of the day, and try not to pay attention to them in the middle of the day because there's no volume to them. No, I think you read it right. I think that you have to, you take the body of it all. Here's the body of it all right here. The bars, right? All right. So you have the bars there. And so you're looking at all 4 points in space, and it's defining a shape, okay? And then what happens is that people a lot of times look at like higher highs or they look at lower lows. I do that with something else. Let me show you what I do that with. Let's see, where can I go to get that? I guess I have to go up in here. I do something with the Dow Jones Industrial Average where I follow, and I'll show you. Let's see, where's it at? Tech Day? Robin Tech. Let's go to Robin Tech. And what this is the Dow Jones future. If I can find it. There you are. And see how I, on the open, high, low, close bars, I have green on some of them. What they are is they're outside days versus inside days. Okay, an outside day is, see the day before, this day we had a lower low and a higher high. they can be very good. That's the only way I pay attention to the highs and the lows. They can be very good um, about defining trends when you link them all together. So in other words, this is the Dow Jones Industrial Average. There's an outside day. There's an outside day. Also, inside days I mark up also. There's an outside day. That's an inside day. Is that an inside day? No, that's an outside day of the day before. This case here, it's an outside day, another outside day. No inside days on this one. But they can, sometimes they blend in inside days also. And so what they do is I take the highs and the lows and I draw a trend line. Now see how this particular trend line, which was really interesting, got to here and then we started getting new trend lines. So I start drawing new trend lines. But I left that in there just to see. And sure enough, it ran to the point in space there, hit it and fell down, which was very interesting. And it does that. Same thing here. That's this line right there, and then that's that line right there. Notice that it hit it here, fell down, hit it here, climbed above it, ran to this trend line, and then fell down, supported. I'm not sure what that line was right there. That line probably was something further, even further back, and then we went up again and hit the trend line again from this trend line right there and became a resistance. So I used the highs and lows on the open, high, low, close bars, looking at the trends, general trends. I'm not much for gap, but I do know that people follow gap and they look to see them closed, and it can put pressure on a market. And that means that something has started at a different point than where it was the day before, and it creates a gap. And there's a perfect example of it right there, the gap action. And so people look to see that gap closed. So they look at the space between there and here, and they'll look to see the product try to fight its way back up. And notice when it gets into that area, it breaks down again. That's usually like they say, okay, the gap has been closed. Actually, they look for a opposite gap. A lot of times. That's what they're really looking for. Doc, do you see dollar strength before ultimate weakness, end of year? Does this scenario make sense to you? Dollar strength. I mean, we're so strong now. If I expect Trump to win, and so the dollar should be even more stronger with Trump winning, because we're going to be even more of an island of success. Forget his metaphors and his ramblings about, are you tired of winning and all that other stuff. His policies are the most important thing. I don't really care what he says. His policies are what really counts as a president, any politician. It's the policies they vote for and the policies that can be passed that mean something to me. And Trump has passed some fantastic legislation. Legislation that people have been asking for decades. So I think he's going to win, and I think it's just going to put more dollar strength on, pressure on the market. Does that make sense to you, 54? In the sense of, does that answer the question? Doc, do you see the dollar strength before ultimate weakness? I'm not sure if there's the only way we get ultimate weakness is that we get like a lot of European industrial nations move away from socialism and start to move back to capitalism, and start seeing new companies created, more innovation, more economic opportunity for everybody, that type of thing. I think that's the only way I really see strength, and in Europe or the world, and weakness in the dollar. Very wise. You're very kind. You're very kind. Thank you. Very wise. I like that. Yeah, I don't see it any other way. I am so disappointed that the European experiment didn't work, where the European Union became a very solid economic center and competitive with the U.S. economy. It is just the Fed's printing like crazy. I'm not sure how much they're printing. How about they're buying? That's one thing they are doing. They are buying. So the fact that they're lending and buying, it's a lot different than printing and throwing, helicopter money, just throwing money out the door. What they're doing is they're buying assets and holding those assets up by buying them and not selling them. That's a lot different than printing. Because what if they actually get something right over the next 20, 30 years, the companies that they bought, and they grow out of these problems and they do more economically positive things, then, it's just like the Exchequer situation with that Bank of Scotland thing we talked about 4 or 5 months ago. The stock market was at all-time highs. It was about a month before the Corona disaster started, 2 months before, and you had, the Exchequer owns a ton of stock like the Federal Reserve does. They're doing the same thing. They're not really printing; they're buying, and just doing a line item on a balance sheet, adding assets. So they don't print that money; they just buy the assets and hold on to them. And so, everybody's, I'm repeating myself about this, but everybody's stunned. How did the Exchequer sell 6.5% of Bank of Scotland stock? People are asking left and right in Scotland and so forth. It's like, well, guess what? Your bank was a bunch of numbnuts, and they basically buried themselves, and they're out of business. And the only thing that keeps them alive is the Exchequer bought a ton of stock, and so they're just lightening up a little load of it. And the people forget; they don't pay attention. So it's just that the Fed, the money has to come from some. No, it doesn't. It doesn't. If you take assets that are outstanding, in other words, are in the marketplace, and you're a central bank, and you just create a line item, and you go, okay, I am now buying their stock, and I'm going to put it in this portfolio, and we're going to hold on to it until it goes to X. And when it won't hurt the company if we sell some of their stock, they might hold on to it for 20 or 30 years. Matter of fact, I saw headlines yesterday from. Did you see those headlines of Powell and the Fed statement about how they'll own bonds for decades now? They're going to own bonds for a long time. They've been purchasing those bonds. So if you're taking, in other words, this is what you're talking about. Okay, so so Bank of Scotland now, the bonds, the stocks are not in the marketplace anymore. The Federal Reserve creates in this case, the Exchequer creates a line item. The Fed does the same thing with like Citibank and all these other companies. And so they create a line item on their balance sheet and says, okay, now instead of X amount of currency we created this. Okay, so if that money doesn't end up in the hands of the population, then there's no reason to think of it as printed money. If they create the money, make it into currency, send it out to the public for free, or something that the public needs, that they can exchange for it, like a repo, or the way they do repos and so forth in the overnight lending with the banks. They sell them bonds, and then they buy their bonds, and then they sell their bonds, to the banks when the banks have too much cash, so that they can reduce the amount of outstanding cash. And then when they think they need to add more cash to the system, and that's printing in a sense, then what they do is they go and buy bonds from banks that the banks now end up with the cash, and they have to go and put that cash somewhere. And so they try to lend it to people. It's not. These are the reasons why we in the United States wanted to have competing nations that could start to compete with us financially and become part of the world financial system. That's why the European Union was invented. That's why the Euro unit was invented. But they instead chose it to be a political thing instead of a financial thing. And so the European Union has not grown. It's only receded and not grown. So the money, printing money is not the same as it used to be, like in 1920s and 30s, and even the 1970s. It's not the same situation. It's more of a line item. Remember, they're buying, balance sheets were totally different. I know percentage-wise, balance sheets have not really changed much to the GDP. But what has changed is that the M12 money supplies have. They've tightened up on the amount of cash out in the system. And so that's why it's not really printing. I see that is why the balance sheet is ballooning. Yeah, it goes up with the GDP. As long as the GDP, matter of fact, when GDP dropped, you'll notice that the Fed balance sheet actually dropped. Because now they've got it locked to that. So they're running things in tight cycles. And so they're not floating cash out there. Trump did the government shut the economy down, and Trump did the right thing and floated money into the system and did helicopter money to everybody. But it's not helicopter money of old where the money went running into the marketplace and created demand, and that generates inflation and generates an expansion of demand. It's back and forth, demand, supply, and so it's not the same. It just doesn't work that way nowadays, because you have the Federal Reserve now buying ETFs, and they've been buying S&P futures, and they've been buying all kinds of stuff since like 2008. Ever since quantitative easing, they've been buying it all. I mean, Robin and I saw where Robin's got some good stories about the floating of the Fed basically coming out and saying we're gonna. I saw the Greenspan say we will buy futures on the crash of '87 that Monday, and Tuesday, Robin and I saw, the chairman of the exchange go down into the pit and start buying tons of stuff before the Federal Reserve made that announcement. So they had all the chairmen of the exchanges on a conference line, because a friend of mine at the time was a real close friend. I knew many chairmen and been on committees, but a real close friend of mine was a chairman at that point of one of the exchanges. And so I was like in the S&P pit up at my little post there where I had my clerk, and I'm talking to him, and he's listening to the Fed at the same time. So thanks for replying to my question mark. Though not sure if I would be able to identify a bullish trend the same way like a quant does. So to rephrase my question, I guess, what parameters would a trader focus on for identification? Well, let's say you're looking at J4X to start off with. All right. So, these stochastics help to give you a generality. Now, it's a little bit tougher, of course, but it's better than a lot of stuff out there. A fast-moving stochastic and a slow-moving stochastic will give you some identity. You have rate of change in there. You can see the bottoming of the action. You can see how it's been somewhat. It's been pretty accurate. Here's the low. There's a low. There's a high. There's a high. Now it's a little nebulous because it's not as precise as my mathematics, but nothing is. So you can go to the Chicago Quant Trading website if you want more accurate data, and take a look at that. Robin will throw the thing up, but you can use many tools. I use J4X all day long. It's a good tool. I use 2 other services. I have 3 services or 4 services around here. So, a trader will use what they can use, what's at hand for them to use. I think that's the best way, easy to really think about it, is that it's not just one tool out there. It's a combination of tools. J4X is a good example. It has some good tools in it, and you can get them for free. Okay, and if you're investing money and using real money, you want to use as many tools as possible. So, we can help you along. Just keep on tuning into the Dukascopy here every day, and we'll keep on trying to answer your questions. There are many strategies that you can use. John Murphy's technical analysis book is one of the best as far as I'm concerned. So you can tune into that every so often during a Dukascopy webinar. I go and find John Murphy's book and put it up there on the web and on the webinar itself. But you need to. There isn't one simple tool, and I think mine is. And here, I can be as arrogant as anybody. And you can see it here. The Doc's math is pretty precise. And look at that weekly sell. What product is that? I don't even know what product that is. What product is that? 70. What's trading at 70? Oh, it's the ruble. Okay. So you can see my math is pretty damn accurate. I think we've been in a sell for a long while. Matter of fact, I don't even see the line in there. But we went into the weekly sell here. And you can see it's how long it's been accurate about it. My math is pretty accurate. You can see the spreadsheet every day. Here at Dukascopy, it's up, we put the fact check sheet there. You can see the number of days and weeks and so forth. You want more precise information? You know where we are. You can tune us in and you can go to the website and do all that stuff. But, I use a couple different tools. And the stochastics is one of my favorites, and that's why I have it up on J4X. And I like to use two stochastics, a fast one and a slow one. It outdoes the rate of change, which rate of change is supposed to be a leading indicator. And when you use when you use a lagging indicator like stochastics, which they call a lagging indicator, two of them, a fast one and a slow one, combined together is pretty accurate. Yeah, we're pretty accurate. We're very accurate. We're 8.5 out of 10 times accurate. We're decades of it, decades upon decades. So, Robin's been an independent watcher and user of the math off and on throughout decades of it, and and at the same time, Robin's been a trader from exchange to retail to newsletters since the early 70s. Robin traded eggs, chicken eggs, before the S&P 500 was even thought about. He was one of probably the first traders in the S&P 500 pit when it was invented. You were probably right, Robin. You were one of the first traders in there, right? You were day one, right? Yep, I want to up my skills so I can take away the anxiety. Well, that's the key right there. That is the answer to it all. I mean, we call that on the trading floor, which don't really exist anymore, your threshold of pain. And it's very important to have control of that. Know why you have that pain. In other words, what are you doing? Like 54, I've been getting 54 to start thinking about using the options with the spot and the futures. And, he says he feels a hell of a lot better in trading, right, 54? When you understand what your risk is and you can back test every day, it's, trading is like an athlete. They train every day. And as a trader, you've got to train every day. Opening range first day. So Robin was in the S&P 500 futures pit the first day it opened. What'd you do? Run from lumber? Did you go from lumber over, or where were you at before that? Or you were in because eggs? I'm sure at that point were dead at that point. So it must have been like or grains, not grains, meats, things like that. Yep, yes, I figured. So, what you want to do is you got to train every day. As a trader, you got to train. You got to stay in shape. And how do you do that? You practice your technical analysis tools and get comfortable with them and know and stay with the system. We used to say on the trading floor, What gets you in gets you out. So in other words, let's say your technical analysis that you've been practicing with, you get long, you start to lose money, and all of a sudden you panic and you get out because you're panicking. And then you turn around and go, like an hour later, you go, damn it, why didn't I hold on to that? You just threw away the training you did. You stopped doing what you were supposed to do. So if you practice every day and every other day you're practicing and you're looking at your technical analysis and you build confidence in the system that you have because you see success, then you lose the anxiety and the fear. No trader is ever left without it, but it's a hell of a lot easier when your tools guarantee you that you know where you're going and why you're doing it. And that's, how many times I've seen people say, I'm going to go short here, and they go short. And the next thing you know is the product is up, and they go, yeah, well, now I'm doing it for the long term. It's like, long term? What's long term? The moment you make money and you're out? So that was the best eye-opening advice got from you, Doc. Many thanks. Oh, yeah. I can see the difference in your trading, over the last, couple months now, especially the last 6 weeks. 54, you're definitely more and more focused with the tools. You're more focused, realizing that well, see, let me stop myself right there. All these people that you hear in the news about how they're long this or they're short that are not really doing what the news is telling you. They're selling you sizzle. And I can tell you that I know some of those people who are in the news. And I can tell you, if I get on the phone and say, I just heard on the news you're short 5,000 oil contracts. Say, yeah, but they didn't tell you that I might be short 5,000, but they didn't tell you how many calls I own. So that's exactly what's going on there. And that's really what it all comes down to, is that the media is really bad at providing information. And so that's how I drifted over to Dukascopy at the time. I saw something going on at Dukascopy that I liked, and I saw a lot less inaccurate, and I saw a lot more accurate information coming from Dukascopy, and I latched onto it and didn't let go. So that is, I guess that's the best way to describe that. So, traders, discipline, practice, discipline, practice, discipline, practice. That is the key, over and over and over again. And when you break away from the rules that you've been practicing, you put yourself into jeopardy of being lost in the middle of a trade and a trading day and so forth. You cannot do that. You just can't. You've got to follow the rules that you develop for yourself. And if you break away from them, you're going to have anxiety and frustration. Yeah, exactly. Quad Z says it best right there. Correct anxiety is a killer. It breaks a trader. So any quant or rules that transfer it to a system is the way to go. Who, me? Have I traded commodities? Oh, yeah. Yeah. Robin and I was a member of the Commodities Exchange Corporation, the CEC, member of the Chicago Mercantile Exchange. I was lazy. I grabbed a clerk's badge for the Board of Trade so I could go on the floor and just hand my orders to a clerk or to the broker myself. So I'd be like, yeah, buy me 10 of those. And it was being cheap at the time because the seats were going for about the same price. I was a member of the New York Stock Exchange. I was a member of the New York Stock Exchange Futures Exchange and the Options Exchange. I've traded, at the CEC. I could trade the options of coffee, cocoa, and sugar, and cotton, and oil, and all kinds of gold and so forth. And I traded futures contracts in them at the same time. I traded currencies. I helped to develop the cash currency options in Philadelphia. I made the biggest trades in the world. They're probably to this day they're the biggest trades of the world. Yeah, I've been a member of every major exchange. Been involved, so forth. So, yep. Yes, indeed. So I hope that's helping. And you know, I can't emphasize enough. Rules. Follow your rules. Follow your practice trading. Follow your practice technical analysis. Follow your rules. Follow your practicing of your technical analysis over and over. The decision-making process to trading, over and over and over. Do it every other day. You know, do it every other day. Just do it over and over. If you can do it every day, do it over every day. You know, even if it's only for 30 minutes or 20 minutes. You know, it will help you to have confidence in the trades you make because you've been practicing them. And you'll cut out the fear. It'll reduce the fear, the anxiety, and so forth. And you'll know when you're doing wrong. You'll know when you're not following your own rules, because if you practice them 20 and 30 minutes a day every day, then you know you're not doing them. You know, you'll recognize, oh, I didn't do that. I can't tell you how many times I've heard people go, I bought it. I said, why'd you buy it? It's in a sell. I know, but I bought it anyway. It's like, you know, it's like, you're not following the rules. What do I think of oil? Are we going to go to stay around the 40s or drop down to the 25-35 range again? Well, 35 is not that far off. Let's take a quick look into it. You know, 35 is right around the corner, so that's nothing. You can see there it's hanging in the 40s. It's at our top of. It's at the top end of what I would call the Corona economy. I guess that's the best way to describe it. The Corona economy. So let's see. Let me go to oil here. Where is it on the Chicago Quant? There it is. There's September corn. See that, Robin? It flipped the day before. The news came out on that day right there, and you can see the weekly was just refused to go into a weekly sell, just like the soybean. Oh, you can't see all that. Let me just do that like that. There you go. See that right there? That's what I was saying, Robin. That one right there. So it went into the weekly buy. Refused to go into it. You know, it did the sell-off with the daily sell. And then I threw a white line in there because I thought that was curious with the red and green dot. You know, it meant that basically if you were foolish enough to play the short here, because we're in the weekly buy, then, you know, you should cover, of course. And would have been a nice win there, of course. But, and then, you know, the news came out the next day. That's the day of the news right there. So they knew it a day ahead of time. As usual, the quant picks up the insiders. See, that's what happens with the markets. The insiders know what's going on. They move prices ahead of time. You know, the Commodities Futures Trading Commission is blind as a bat. Well, no, bats are actually, that's be insulting a bat. They're just deaf, dumb, and blind. Just leave it at that. And so, you know, you think they were investigating anybody that spiked up the corn right there that day? I doubt it. I don't see any investigations being published. They're not doing a thing. And so, and that's all insider trading right there that day. Then the next day, the news came out. Yeah, where's the CFTC when they're supposed to be working for a living? Vacationing. All right, so let's see. Where are we there? So, yes, that's what's going on there. And so oil. Oh, yes, that's where I was headed, oil. So it's just that insider stuff always cracks me up, and they do nothing about it. Oh. Yo. Where are you? There you are. There we go. So let me get the oil on there, and then I'll get going. We'll go after the oil tomorrow.
Hey.
Hey, did you turn your machine on?
My machine is on.
Good. I'll screen share in a few seconds. I'm on. I'm not there.
I'll have to wait till I get to work. I got the options form filled out and sent in.
Good.
But I can't use multi-charts. They don't do options.
No. That's just a charting service. I think they might even have a page for it, but that's irrelevant. It's the brokerage account that you get through the options through. Let me finish my webinar, and I'll call you right back.
I'll be still in your webinars.
All right. So anyway, there's the oil. That's oil, right? Yeah. And so you can see here, you know, it's holding up. You can see, you know, look at the bottoms here in the J4X. You see, you know, it catches it all the time when you use the two indicators right there. It breaks through the slow one, It's a good signal. Breaks down through it. Breaks down. Breaks up. It's a good signal. And I have a rate of change on there to help out. But so there, for it to go down to the 35, I don't think that's a far stretch at all. All I have to do is, see the economy slow a little bit more. I think that would be the answer to that one. Arresting a broker. Yeah, right. When's the last time they arrested a broker on the future side? Honestly. They let that stuff go on and they're doing nothing about it. And my math picks it up all the time. I said that to them 20 years ago. My math picks it up. And they're clueless. Totally clueless. All right. Anyway, this is Doc from North America. We will catch you tomorrow on TGIFFF. Friday. So we will be here same time, same channel. And as usual, happy trails to you until we meet again. Happy trails to you, all my trading